Titano Finance, the third most requested video other than Strongblock and Drip Network. Let's get into it. Titano's ROI per year, 1,002 times your money. Titano's initial coin supply, 4 billion tokens. Titano's circulating token supply, Titano's total supply, 838 million tokens. Titano's market cap, Titano's price per coin. How much can you make in 1 year if you invested $1,000 in Titano? Apparently, $1,002,758 and some odd cents. 1,002 times your money. Titano's APY, over 100,000% per year. Titano's APY per 30-minute compounding period, 0.03958%. Times that 30-minute compounding period compounds per day, 48. How much percent does that 0.03958 add up to per day? With 48 rebases, that's 1.89% on your money per day. Titano's RFV, which means risk-free value, which is what they lock up to use as rewards payouts, 2.5% or better of the current supply of tokens. What the APY actually is per year, 65,000%. I'll show you why in just a few minutes. How long can that APY pay out? Indefinitely, as long as there's new customers coming in and liquidity is locked. Now, I just want to touch on this really quick. I appreciate everybody coming into the comment section and requesting new videos. That is what makes the content good. I want to know what you want to see, and then I make it. So with that being said, if you're commenting something that hasn't been covered yet, you just kind of got to wait until it's in the pipeline. If it gets enough upvotes, that's what we're filming, right? So Titano was like the third most requested. And the reason being is because I think a lot of people are seeing the financials behind all of these institutions, right? And they want to know, okay, what are the financials behind these other ones that I'm looking at or the other ones that I'm invested in? So that's where they come into the comments section and they request that video. Let's go over Titano's assets to liabilities ratio. As it currently sits, their total RFV balance right now, which is essentially the wallet that they use to pay out the rewards, is 11,329 Binance coin. What that means is that's 4.3 million. On the website, it does say that they have about $4.3 million in that wallet. Now, the treasury wallet is 5,711 Binance coin in that wallet. That equates out to about $2.17 million. Now on the website, and I'll flash it up on the screen, it says that they actually have over $6 million in that wallet when you go to the wallet, and I'll drop that in the description so that you can check it yourself. So their market cap as of right now at that coin token price and at the circulating supply that they have currently right now is about $92.5 million. It fluctuates, so it might be different when you look at this. Percent of the market cap that's actually locked up in that RFV, which is that treasury, is about 7%. So that's better than the 2.5% that they're actually quoting in their white paper. So that's good. Their daily payout is about 1.89% to every investor that's compounding. That's $1.75 million for the amount of tokens that they have right now. That's how much they have to pay out to their investors every single day. In the white paper, it says that the treasury is also used to fund other Titano products, services, and projects, and this is supposed to expand Titano as a project. It's also used for providing liquidity and funding to marketing, which, as we know, is absolutely critical. You have to market if you want to get new investors in. That way you can continue to pay out that 1.89% to everybody every day. Now, how do you make money with Titano? It's actually relatively simple. You buy Titano and then you put it in your wallet and you connect your MetaMask wallet to the Titano website, and then it just automatically gives you your rewards. Now, you don't actually have to go into Titano's website and click stake or anything like that, so it's not like Time and Ohm and all those others. The APY is fixed for 1 year, and this is extremely problematic, and we'll get into that in just a second, but at over 100,000% every single year, think about it. That's just not sustainable. It just is what it is. I don't care what anybody says. Wall Street firms don't even make 100,000%. And those are the people that are moving the markets. Those are the people that are controlling the markets. Those are the ones that are writing and selling and buying the options premiums and manipulating the markets. And they don't even make 100,000% per year. So how would your grandma that takes $1,000 and puts it into this project expect a better return than any other return in the entire market? It's just not plausible. So here's a few pros to the projects, because I get it. Everybody's like, Drew hates projects. Drew hates all projects. No, I don't. These are just the projects that people are asking me to look into, and I'm kind of picking apart the things that I'm seeing, but I'm also trying to show you the things that I think are positive about the project too. This is not a fork. They've audited the protocol and they're saying this is a totally new contract and it's not a fork of anything else. So there's nothing else out here like this. Cool. The owner wallet actually contains 0% of the coins. That's a plus. The creator wallet as well contains 0% of the coins. Beautiful. The contract has been audited by Certic. Technically, it has not been finished yet though. It's been at the 85% finished range for like a month and a half. So it's a pro that they are being audited because it shows like transparency, but it's not necessarily a pro that it hasn't been 100% completed yet. So they're bringing out a new version V2 contract and that's supposed to be audited by Certic, but if they haven't even gotten the first one audited, when's the second one gonna get audited? That's my main question. Now let's get into some of the cons about this project. They're technically not being transparent about the rewards. They're on their website saying, oh, 102,000% APY, blah, blah, blah. First off, do the math. It's not 102,000. It's like 100,258%. So there's that. Then if you invested $1,000, okay? And correct me on this part if I'm wrong, but either way, the math stays the same because of the end result. So stay with me. That $1,000 due to their fees, the way that they bring in their revenue is through fees. Now, due to those fees, the 13% to buy the token, that $1,000 that you just spent is now only worth $870. So you're already down 13%. Now, if you invested that whole $870, you would get your APY and you would end up having about $799,000 when it's all said and done. Oh, big deal, Drew. It's, the difference in between $1 million and $799,000. No, it's not about that. It's not about the money. It's about the fact that you have to be transparent with what you're telling people. So telling people that you have 100,000% APY when it's really more like 60-some thousand is a big difference and not cool. Once you withdraw that $799,000 that you've accrued over the past year, it actually turns into $655,000 because of the 18% unstaking or profit taking fee. So with that being said, the APY is really more like 65,500% and some change, which is 655x your money in a year. But that's a lot less than over 1,000xing your money. So there's a big discrepancy there. That's like a 40% discrepancy. And I just don't like that. Now, this all depends on the token's price. If the token goes down, even less, right? It's gonna be even less money in terms of USD value. But if the token goes up, everybody's dancing, we're all having a good time, and you made a lot more money. Now, the reason why the latter of those two is not going to happen is because the token price isn't going to go up, because the more people that get into the project, the more they have to pay out in rewards, the more people are taking their profits on a daily basis and selling them on the open market. Plus, the circulating supply is not stagnant. It's constantly moving. So that's not a good thing for price action. This is a self-fulfilling prophecy, and we're seeing it with all the DeFis right now. They grow at these astronomical rates, then they tear off, then they crash out. Once the project grows, the people selling their profits starts to outpace the new blood that they can bring into the market to pay those APYs. These people are literally making 100% on their money in terms of tokens in 37 days. That's an astronomical payoff period. And if somebody's telling you like you can make 100% of your gains back in 37 days, run the other way, because that doesn't exist. It does whenever you're like early, first mover, absolutely, because the people that are buying after you are actually paying you, right? But if you're later into the game, mark my words, you're getting wrecked. Also, they've only been around for like 3 months. They came out when all the other DeFis came out, and it's great that they've survived. I give them props for that. But at the end of the day, it's a very new project, and your growth rate is astronomical. So how do you sustain that? The reason why the growth rate matters is because of what I said before, how when you don't have as many people coming in and there's already an absolutely astronomical amount of people that are in, that sell pressure, the people that are taking their profits starts to outpace the new money coming into the market. Another bad thing, and don't be jumping down my throat because I know I'm gonna cover it here in just a little bit, so watch the whole video before you start going into the comments section saying, oh, Drew, you're wrong. The owner can raise fees at any time they want. So those 13 and 18% fees, they could raise that unstaking fee to 100%, and then nobody can take the money out and they could just basically take all the money and run. They're supposedly fixing this in the new contract, but that has not been signed, sealed, and delivered. So as it sits right now, That is still in the contract. That's all I'm saying. Another thing, the whitelisted or approved wallets can mint new tokens up to this crazy, ridiculously high amount of coins. It's like 358 bazillion coins that you can mint up to. Now, again, the new contract is supposed to be taking care of that. I get that, but it hasn't been signed, sealed, and delivered yet. It hasn't been audited yet. They haven't shown the source protocol, the code, or the contract, how it's written, any of that. So that's null and void right now. If they fix it, great. So that means that whitelisted wallets can just start minting new tokens and it's free money. They just dump it. And this actually just happened. So someone hacked like the little lottery protocol that they have that's called the PLAY and minted an absolutely astronomical amount of tokens to the tune of like $2 million. And they dumped it on the market and you saw it happen in the chart. It was at like 18 cents. It dropped all the way down to 4 cents and then back up to like 13 cents where it stabilized. That's scary that people can just like hack that protocol. And again, that goes with a word of caution. I know they're trying to fix the protocol, but it's not signed, sealed, and delivered yet, so not an argument yet. So apparently Titano Play was hacked through a vulnerability and they're like whitelisting and minting new tokens contract. Okay. Certic came out and said, we're auditing this, we're gonna help Titano fix this, and we know that the Titano owners and creators weren't the ones that did this. This was actually like a coordinated attack on Titano. Okay, cool. Still a problem. So essentially what happens is through that play like lottery thing, it creates tickets if you win to mint new Titano to claim your prize. Now what they did was they minted a bunch of tickets, they minted the Titano, and then they sold it on the open market and just absolutely tanked the price. With literally not that many coins. Like think about it, it's $1.9 million worth of liquidity. That's not a lot. If that can take your market down that substantially, that is not good. So apparently the hack didn't affect the protocol, it just affected the play protocol and everybody's gonna get their money back, blah, blah, blah. I get that. I'm not gonna touch on it too much because I've already spent enough time on this. The tokens burned at initial token creation were less than 10%. Why did you only burn 10% of 4 billion tokens? Like, some whale wallets actually hold over 5% of the total supply. So somebody bought it for, pennies on the dollar and they've been holding it. And they actually just blacklisted this one whale wallet that was worth over $4 million. Man, that's dirty. At the end of the day, that person made a smart investment decision, and whether or not they want to get out is not your decision. You don't just get to say, and apparently they do, hey, you don't get to take any of your money out. Now, did they still make like 1.6 million? Absolutely. But did they leave like, couple million on the table? Yeah. And you're taking people's gains from them for what? So that you can protect your protocol that was vulnerable because you made it vulnerable. Now you're taking your investors' money and basically locking it up, and those will never go anywhere ever again. That's not cool. I get it from both sides, but still, it's a weird thing to do. And they're saying, oh, we're only going to do that once. It's the one and only time we're going to do that. Okay, cool. That leads me into this. I thought this was really funny. In the white paper, it says one additional benefit of the high fees is to stop whales from tanking the price, but you're still blacklisting whales. Sounds fishy. Again, I'll touch on this again. Apparently in the new contract, the mint function is going to be taken care of. You can't do that anymore. They're fixing the fact that the creators can up the fees on people until it's actually in the paper. I don't believe it. The Certic audit has been 85% done for like 2 months. Why? Did you guys tell them to stop? You told everybody we're getting a Certic audit. That just makes one think you might not actually be getting that audit anymore. They might have raised some concerns and then you were like, no, stop the audit. Now it's kind of like an imminent rug almost. Now, another thing that was weird about the contract is that the whitelisted wallets are exempt to fees. Why? They can change the wallet addresses for the RFV and the treasury anytime they want. They can also end the initial distribution period anytime they want. That means no more rewards. They can also change the LP pair at any time. They can toggle the swap back feature at any time. The owner can change the target liquidity value at any time. And obviously they can remove or add a wallet address as a minter at any time that they want. And this is the thing that's the most concerning. If that's not enough for you, right? And I don't even have time to explain all of those things. If you want me to explain them, I'll do it in another video, but I don't even have time to explain why those things are problematic. The owner may withdraw all BNB or ERC20 tokens at any given time, anytime they want. What? Are you kidding me? If that's not like problematic and showing like imminent rug pull, I don't know what does. Like, they're saying this is supposed to be this safe investment. They're saying that this is supposed to be an ecosystem where everybody has a say. But look at all those things that are at the owner's discretion, the creator's discretion. That doesn't scream transparency to me. That doesn't scream democracy to me. You tell me if you think something different. Now, I get it. Everybody hates Drew because he's about to say this. The 102,000% APY, not sustainable. If anybody can think about that logically, they'll know exactly what I mean. Like, you cannot sustain 102,000%, period. I don't care what you say. You're not. It just doesn't work like that. If that was the case, everyone would be rich and nobody would have a job. Nothing actually determines the APY because it's fixed. Usually in Ponzi's, the old investors get paid by the new investors, right? That's exactly what's happening here. Time, ohm, all of them. None of them were static. Their APYs fluctuated all the time, intradaily, right? Every second of every day, based on how many people were going in and out of the project, how many tokens were being minted, how many new bond sales there were. That doesn't make any sense how you can say, oh, 102,000% APY. Get out of here. I don't believe that. And if anybody does, I don't know what to tell you. Imagine if you went into a bank and you were like, I'm gonna give you $500. I need 102,000% on my money this year. They would laugh you out of the building because it simply doesn't exist in traditional and regular finance. It just doesn't. And everybody's like, oh, but it's crypto. Yeah, crypto is a cash grab. Crypto is a fugazi. Crypto is one of the most risky markets you can be in because of this type of stuff. And that's why crypto doesn't get much credibility in the financial realm right now, because they do stuff like this in that market. At the end of the day, the more of the people come into this project, the less the APY should be. It's like a bell curve. You're going up and you reach this point where you've peaked at the level of we can pay out everyone that already invested based upon the new investors that are coming in. And then it starts to tear down where it's like we have too many people that are already invested and we can't afford to pay the people that are already invested based upon the new revenue that's coming in from new people getting in, because our project momentum is starting to top out. Think about it like this. You have $100,000 in new money coming in every day. You only have $50,000 worth of investments from people in your protocol right now. You can afford to pay those 50 people either 2x their money, or you can pay them a fixed APY of 1.89% and bank the rest. Okay, further this goes, the less that happens. Say that same 100K comes in every day, but you've got $1 million from people that have invested. You can only afford to pay people 10% out, or you can pay out the 1.89%. You can see where I'm going with this. Once you have so many investors, you're not gonna be able to afford to pay them on the new income that's coming in. Okay, cool. So now what about the new contract? Drew, talk about the new contract because you didn't give that enough validity. Certic has told them deploy the new contract, it's good to go. That's what they've said. I don't see anything from Certic on their website that says that the contract's good, right? You can't even click on it and see it's still 85% done. Whitelisted wallets can't mint new coins. They're removing the rescue function, which means if you sent Titano to the wrong wallet, they could before or now recover that for you. But what that did was that showed that they had access to the treasury, the RFV, and stuff like that, and that they could just essentially run off with the money anytime they wanted to. So that had to be fixed. Has it been fixed yet? No, because they haven't deployed the contract. The buy and sell fees are supposedly supposed to be fixed now, like fixed in the sense that they stay at 13% for buying and 18% for selling. They're also multi-signature wallets. What that means is more people need to sign in order for something to happen in the protocol. That is supposed to be coming this week. We'll see if it happens. My guess is it doesn't. And I'm not giving any validity to it until it's confirmed and posted, period. And neither should you. I can tell you all day that I'm gonna gain 20 pounds in the next whatever, and I'm gonna make the football team. But until I gain those 20 pounds, you don't want me on that team. See what I'm saying? You're not gonna sign me before. You want to sign me when I've gained that 20 pounds. Mass, baby. Certic audit is only 85% done. Period. Nothing's finalized. Come on. Okay, cool. How does Titano make money? Off of the fees. Period. It's just the fees. I'll go into the other revenue streams, not too much, but buy and sell fees. Period. 5% of the trading volume goes into the RFV. The RFV buys and burns the tokens, apparently. It's a 13% buying fee, and the way that it's broken down is 5% to the RFV, 5% to the liquidity, and 3% to the treasury. 18% selling fees go as such. 5% liquidity fee, 3% treasury fee, 5% RFV, and 5% sell fee. Now, there's a 10% early exit fee on this play thing that they have going on, which is essentially a lottery. If you withdraw your tokens in the same day, you get taxed 10% on it. It's a 10-day period, so it goes down 1% every day. So if you leave it in there for more than 10 days, you're good. There's no tax. The fees far outweigh the APY that they're paying out right now. I get that. But if the project loses any bit of traction, right, and it stops going up, stops new investors from coming in, that's where it's problematic. The fees won't be covering what they have to pay people out if new people aren't buying the token. You can say, oh, well, the sell fees will cover it. Yeah, but then people are only selling it, then the token goes down in value, and then you're not getting your ROI either way. Okay, cool. So what about their new revenue stream? I love talking about new revenue streams because most of them make 0 cents and they're not going to do anything. They're just a band-aid to prop up the price and keep people investing until they can, make enough money to be out. Cross-chain integration. Get more buys and sells and bring in fees. I get that. DeFi partnerships, whatever that means. This is literally on their website, in their roadmap, on their white paper. Go look at it. DAO. That's literally it. That's all it says. We saw how that went. Time, Ohm, Hector, Jade, Metaverse Pro. Come on, give me something good that I can work with here. Titano merchandising. Buy our merch. That's not bringing in 100,000% per year, homie. NFT collections. Good luck. I love the fact that everybody's like, oh, NFTs. NFT tap project. Everyone says NFTs right now because NFTs are sexy right now. Doesn't mean that you can pull it off. Doesn't mean that that's your market, okay? Now, with all of that being said, I want to issue some words of caution. I told you the pros, I told you the cons. I didn't even tell you if I'm going to get into the project or not, or if I'm in the project or not. Spoiler alert, I'm not in the project, period. I'm not. Titano and the cryptoverse in general pays YouTubers for reviews. All these people that are out here pumping, yeah, Titano. If they got like 50,000 subs, man, they probably got paid to do that. I'm just saying. Unbiased reviews are hard to come by. CoinMarketCap and other websites like that, they do the same thing. It's pay to play. If you see, oh, well, we're trending on CoinMarketCap, we're number 3 in trending. Yeah, Titano spent 25 grand a month to be on trending. It just is what it is. It's pay to play. Now look at the market cap and the rank of the project. If the market cap is going down and the rank of the project, say it was ranked at 3,500 and it's trending, but now it's ranked at 4K when it's still trending, are new people coming into the market or did they just pay for that? See what I'm saying? Watch the charts. They tell the story. Lower highs, lower lows, trending downwards, period. Here's the screenshot. Market caps of DeFi seem to like top out at a certain level. That's just what I've been noticing. 200 to 250 million range. Don't be the person that gets dumped on. Titano Play. They promise an entrance to a drawing that pays out more rewards to you. And then they tout it like, oh, it was studied by Harvard Business School and it's now offered in 33 US states. Yeah, their stuff is, but not your stuff. It's a different thing. You can look it up. It's called a prized linked savings account. That's not a play. That's a PLSA. It's different. The Harvard one is that. Yours is play. You're not Harvard. This is how you keep the coins in the protocol. You, the investor, are liquidity. They guarantee that you keep your coins in this play project, but somehow they pay out even though they don't take your money. Like the lottery, okay? There's a reason why the lottery is there. It makes money. It's because whenever they put up a $250 million jackpot, it's because they brought in 500 mil. So they actually made a bunch of money. There's a reason why the lottery jackpot goes up every single day. It's because more people buy into the lottery. Now, if that's the case, then where do those coins come from? The rewards, the locked up supply, the other tokens in the market that no one knows about, minting. The prizes are generated through a simple mechanism, as they say. When a new participant enters Titano Play, the amount deposited will generate a yield. So they're saying that the money that you put in generates the yield from the protocol, but they're also giving you the yield. When you put the money in, they don't stop your compounding. Are they double compounding here? And if that's the case, how does that work? That interest is what generates the money to pay out the reward, apparently. It makes no sense. So no one loses money, but you can gain an astronomical amount of money for no risk. What? Something's happening, and if you know, tell me. The chance of winning is weighted more heavily on the people that put more tokens into that. Another way that they keep your tokens in the protocol. Oh, hey, put a bunch in the play project because if you put in 100,000 tokens, you've got a 10 times better chance than the guy that put in 10,000. See what I'm saying? Like, come on. That's all basic, just multi-level marketing 101. Keep the coins in the protocol. Keep people from taking profits. That's it. And they're geniuses. They're incentivizing you to do that. They're like, yo, don't take it. You could compound those rewards into compounded rewards and then put them in this play project, and then you could get like way more rewards because if you win, but only one person wins. Oh, it's based on game theory. Dude, every project says it's based on game theory now. All the projects tout this because it's like a basic economic strategy that literally everyone knows. Go ask your mom if she knows what game theory is. Even if she's never gone to college or taken a basic economics class, she's probably gonna know. And everybody bites on it because they think it sounds like smart and innovative and trendy. Sounds weird because this is game theory. The study of the ways in which interacting choices of economic agents produce outcomes with respect to the preferences or utilities of those agents, where the outcomes in question might have been intended by none of those agents. Yeah, I bet no one intended for Titano to absolutely collapse and make them no money when they were being guaranteed 100,000% APY. Duh, that is game theory. Come on, man. But the game theory behind it shows unsustainability and no revenue generation streams outside of actually selling the tokens and taking a tax on those. So once the token sales and buys slow, the protocol ceases to exist. Finito. The biggest issue with game theory, like most other models, it relies heavily on the assumption that people act rationally and that they're self-interested and utility maximizing. Essentially, we take care of each other, right? No one cares if the other players win as long as they make their money. It's human nature. I don't care if you win as long as I do. That's why the ecosystem is unsustainable. With all that being said, I appreciate everybody showing up to the video. I hope that you learned something here. I hope I didn't lose you in any of this. If you want me to do other projects, comment them down below. That's how I figured out people wanted to hear about Titano. Like the post, subscribe, bang that notification bell, right? Like your life depended on it, because I'm dropping stuff like this 2, 3, 4 times a week sometimes, and you want to be in the know. That's my take on all of this. I'm not going to sit here and tell you whether I'm going to go into it or whether I'm not going to go into it. I want you to make your own decision for yourself based on the facts that are laid out here. Go check it, go do your own research, check the white paper, look at all the numbers behind it, check the numbers that I'm doing, fact check that stuff, and then come back and tell me what's good. Another quick thing I want to thank everybody for is the absolutely astronomical amount of love that you've been showing on the channel in terms of likes on the videos, comments on the videos, and just subscribers. I was at like 40 subscribers like a week or 10 days or something like that ago. Now we're at like 700. I appreciate everyone showing up. I appreciate all the love and support. Let's continue to grow the channel. I'm actually very humbled by it, and I'm glad that everybody's having a good time and enjoying the content. So with all that being said, I will see you in the next video.